Market Technicals Morning Call video for Monday, May 13th. Hope everybody enjoyed their Mother's Day yesterday. Beautiful day out on the East Coast to spend some time with your mom. On with the markets. Friday, we had another up day. Dow up 35. NASDAQ up 26. S&P up 7. The dollar now is what we're going to talk about, up 42 cents, and gold down 15. We were looking at this area in gold, and I'm going to show that to you in the charts in a moment, that 200-week moving average comes in at 1444. Well, it was breached, but on a closing basis, we closed back above it. Now, in the pre-market session today, early this morning while I'm recording this, gold's trading at 1428. So, to me, we need a close below the 1444, where I would actually say it'd be safe enough to say that I will be looking for some shorts, looking to short gold itself below the 1444 area. But again, I'm looking for a closing basis below that. We have not gotten that on Friday, excuse me. But let's see what happens today. Very interesting. And now the dollar is really strong, really picking up momentum to the upside. That's definitely going to hurt the commodity block currencies, as well as our equity markets. Now, we haven't seen that yet. We haven't seen that weakness yet. But it's interesting to see what's going to happen this week. It's going to be a real interesting week. We have a lot of economic data coming out this week, so make sure you look at the board and position yourself accordingly if you are holding stocks. Today we have our April retail sales. They're going to be released at 8:30. And then we have March business inventories to be released at 10 o'clock today. All right, they're looking for an increase of 0.03 versus a gain of 0.01 in February. That's the March business inventory. So just wanted to give you guys a heads up on that. Always look at the earnings calendar. It's really important because that could actually skew what the markets want to do. Anticipation of what it's going to do, basically, on what the numbers come out to say. So just use a little caution with that. Okay, now I am going to run through it. It is big picture Monday. We do this every Monday, and I am going to run through some indicators, but we all know the indicators are through the roof overboard. But I do want to show you where we are for the beginning of the week, and then we'll run into the charts. Right now we have our NYMO. We were overboard a little bit, and then we did pull back on that Thursday, and we popped up ever so slightly for Friday. So we're still in an overboard state, but not as much as I would really like it to be. To be honest with you, to be quite frank, the NYMO is not as overboard as all the other indicators I'm going to show you. But again, it's a really good indicator, a reliable McClellan oscillator, and I like to look at it on a regular basis. Okay, we have our NASI weekly. That went on a buy signal 3 weeks ago, and it's still on a buy signal. And if you look at the stochastics, the 5-3, we have plenty of room to run before we get overboard. So that means that we do have some room to the upside, and even though we are overboard on our indicators, that is not a sell signal. So the NASI weekly is showing a buy signal. The New York Stock Exchange Summation Index is also showing a buy signal, as you can see here. Okay, now let's take a look at dial down deeper into the SPX 200, way overboard in nosebleed sections. But again, markets are not pulling back, and reason why, because everybody's looking for the pullback. It will not happen until it's unexpected, and unfortunately, that's how the market works. Tries to create the max pain for everybody. Here's the S&P 50 stocks above the 50-day moving average. Again, broke down from this downtrend line. We were making lower lows and lower lows. That while the market's making higher highs, we had divergence. Divergence ended up being negated on this last push down, and now we're back above 89%. So stocks above the 50 are also in overboard territory. Okay, our VIX hasn't moved anywhere. We've been literally for the whole week sitting around 12.5 to 13, pretty much all week. Now, the funny thing about the VIX that if the markets were bullish, which they were, the VIX didn't move anywhere. So there is protection being bought. The options market is stating that there is protection being bought. So we just want to keep an eye on what the VIX does. Remember, I definitely don't trade this type of instrument because if the markets don't move, it just erodes your investment. So it's really not a good investment to trade unless you really get it, your timing really exceptional, that the markets start to sell off. Because then you could see, an 8 or 10% move in a day in this VIX. So it's good if you're good with market timing. Other than that, I would just stay away and just look at this as a barometer of what the markets are doing. Okay, so now we have that. Now let me take a look at copper. I want to show you copper daily, copper weekly. We had a nice big move up, and again, copper was extremely oversold, so that really is a good indicator to tell us what the markets were doing. We did play a little catch up with equity markets, but we'll see where copper goes this week with the dollar having some strength. Here's the weekly chart of copper. As you can see here, 3 weeks in a row, kind of back testing this area here, hitting the 8-day, actually he's a 13 week moving average. So let's see if this market can actually, if copper starts to roll over again, that might just be another sign of equities to come. And if gold really starts to sell off, guys, I mean really hard, you're going to see money. You're going to see money coming out of equities, and why? Because the markets are going to be creating max pain for the holders of gold that can't hold, and they're going to be getting margin calls. And margin calls are they're going to be selling their gold position and or selling their position in equities to obviously support their gold position. So you'll see what happens if it really starts to sell off. You'll see equity start to sell off with it as well. Okay, there's copper. Now let's talk about gold while we're on the subject. Here's a longer term chart of gold, and this is really good. 8 and 21. If you look at this actually back in 2000, we haven't crossed an 8 and 21 moving average in quite some time. And look at what happened. We just crossed it last week. And this is actually very scary, and I just want to show that to you here. As you can see, a little closer, we closed it ever so slightly. Now, this has been telling us that we've been in a bull market for a long time, and even this big sell-off we had in 2008, we never even crossed over. Now we're crossing over. So this is actually interesting to see. So you might want to follow this. You know, I just take an end of day spot gold price monthly, a monthly chart, and put an 8 and 21 on there. Nice to see, just kind of chart if you're a gold bug. Okay, so here's the gold weekly. I want to show you gold weekly. And we did breach that 1444, but we closed at 1447. So today, I want to see it break and close lower, and that's going to initiate a sell signal in gold for me anyway. Okay, so if you are looking to trade it, keep an eye on that level. That's going to be a big level. Okay, so let's go into the charts. We have the S&P 500 daily chart, as you can see. We had an inside day, an outside day. We had an inside day for 3 days, and then we're just sitting at the upper end of the range. Actually quite bullish, right? So we're at the upper end of the range, and we're in this resistance band of 1625, 1635, and we're sitting here at the upper end of this range, holding. That's bullish. That's actually bullish price action. Even though the markets aren't doing anything, they haven't done anything for 3 days, it is still bullish. So right now we are down about 4.5%. 4.5, 5 handles. Handles. We would probably be below this area here. So we'll just see. It's still early to tell. It's early this morning. But again, if we start to break lower, look for at least a catch in this uptrend channel, lower trend line right around here. So we'll see. We'll take it one step at a time. Again, I would love to short the market, but I am not doing so because of the fact is you don't short the market because the markets are just at its highs and we're overbought. We need price to start breaking down. We need to see lower lows and lower highs, and then the next back test on the next week rally, that's when you initiate a short. That's the proper way of shorting the market when you're at all-time highs. You don't want to be shorting anything at all-time highs because why? Markets continue to go higher, or stocks can go higher. So just let's be a little prudent. Continue to take the best trade setups. And again, if you are long and you're holding stocks, just manage accordingly to your stop, to your management plan, and just kind of trail stops. I still would not be looking to add to any long position in the market here without some sort of adequate pullback. At least a minimum start of 4%. You're looking at the 8-day moving average is 1611. We're hanging in at 1630. I'd like to see a pullback at least to the 20-day moving average, and that's coming in at 1576, 1578. That would be your first logical area of support if we were to hold this uptrend. Okay, that's the cash. Take a look at the monthly chart. Screaming overbought, 97% on a monthly chart. Very rarely do you see that. You see that all in here. This whole climb, 04, 05, 06, 07. It's just crazy. Now we're at 97%. MACDs are through the roof, and we've broken out this heavy resistance on a monthly chart. Okay, now we do have this uptrend channel. We're coming close here to the upper end of this channel. So definitely want to keep an eye on that area here, to 164.5, 165. Here is the Spider Weekly. As you can see, through the roof. We are not as overboard on a weekly chart, though. We still are way above the 80%. MACD's overboard. And look what's happening. Weekly volume breaking lower and lower. So this is not really a great sign that the market's moving higher and there's less volume coming in. But we are trailing that upper end of that Bollinger Band, signaling overboard. So this, to me, is risk is obviously to the downside, but nobody knows when. We can continue to grind higher here. So just use caution when you're trading and you're holding stocks. Anything can happen. One overnight economic bad news comes out, or a geopolitical event come out, you can see the S&P down 20 handles in the pre-market. Here is the Spider Daily. As you can see, we have reached the upper end of this channel back from November, and we are here sitting right in it. So this is going to be an inflection point here, to see if we're going to break out or if we're going to roll over and at least test this area 159, 160 in the SPYs. Okay. Here is the 30-minute chart, Bollinger Band, signaling another big move to come. We've been tightening up here ever since the 6th of May, and now we're just sitting here right now looking for some sort of resolution, either to the downside and or to the upside. So keep an eye on the Bollinger Bands. It does not tell you to move. It just tells you that there is a large move to come. Here's the IWM's doing its thing. It took out of the 3-day consolidation. So one of the leaders that we follow are doing well. So that played a little catch up. So this is actually pretty good in itself. But again, the markets are extended, guys. All right. So we want to keep saying that and realize that markets are extended. But I'm not looking to short the market. Not here, not now. Here's the transports. Weaker than we had an inside day. We've been in this consolidation pattern for 4 days now after the breakout. And it's normal price action after a breakout to consolidate and then move higher again. So we are at 93. MACDs are overboard. However, we are just consolidating here. And the longer we consolidate, the more it unwinds its overbought reading in our indicators, which could tell us that we can have another move higher. Okay, so we want to let price tell us where the market is headed, not assume where the market is headed. Diamonds just really haven't gone anywhere. Dojis, couple of big candles, and now it's just sitting at the upper end of the range. Again, still bullish, but we haven't gone anywhere, so we're going to let that market tell us what to do. One thing I was looking at was the banks, and I've been following the banks for at least a few weeks. It's interesting. The banks they get really excited during the day, and all of a sudden they lose their luster and they start selling off again. So the banks, we had Goldman Sachs in this area here at 150.90, looked like it was going to break out, failed to break out, and now just back tested this upper end of this channel. So does Goldman break out again? This is interesting. So if not, we look for a pullback to the 145 area. If you are looking to buy Goldman, I'd be looking for this area right here, right in the 145, 146 area. Let it come in a couple of points before you look to buy it. That would be the bull flag setup. Now remember, Goldman has broken out of its bearish symmetry, right? So now we have lower lows, lower highs. Now we broke out of the downtrend line, and now we're back above it. So we should be looking to buy pullbacks, bull flag setups, and that's what's happening here now. Let's see if Goldman starts to break out higher, or it could easily just roll, and that could just be a failed breakout and then resume its downtrend. So Goldman is also at an important point in price. We're going to see what Goldman does as well. Now, if you look at the XLF, the XLF is actually holding above its uptrend line, right? It was formed a nice little bearish rising wedge, and we just call this an uptrend line now, uptrend channel. Since it did not break down, this to me just looks like more of an uptrend channel, like the SPX. And we are at the upper end of this channel, which we have another channel within the channel, and we're just holding there. So it looks like it's pausing. We are overboard. Could we roll back down again? Absolutely. That would be a great spot to buy, would be right in this area here at 1855. That would be your cue to be looking at some, if the XLF starts to break down, or if you're looking at any other banking index, that would be your cue to start looking to short the weakest bank stock. And that's really what comes down to it, until we get to a certain point here that you'd say, okay, now that the XLF is back manageable at the 20-day moving average, you can take an objective long position in one of the bank stocks. for a possible move higher again after we unwound it overbought. And that's what I like to do. Go through the ETFs, dial it down to a stock, whether it be a long play or a weak play. Here's Apple. 2 weeks of a nice move. Doji for the third week, indecision. If we break the low of last week, then I think we start to roll back again, at least to the 420. But we'll just keep an eye on it. Right now, Apple did have a nice move. But again, guys, it is a little bit overextended. We did hit the 20-day, and we are right now in, and we have a doji candle. So let's just see if this starts to break lower here. Same thing with the daily chart. As you can see, managed to break down. I think the 440 test is going to be a critical spot. If we fail that, then look for the back test of the 420, 425 area in Apple. Just want to show the SMHs. Had a nice recovery from this breakout, and now we're just literally an overbought, a huge overbought. Look at this. Look at the MACDs at 97, 99. So tech looks like it's due for some sort of a pullback in the coming days and weeks. Again, there is no sell signal yet. Remember that. Please keep that in mind. But we wouldn't want to be looking to accumulate technology at these areas here. And lastly is the Qs weekly, looking like a breakout here itself. Actually did break out of this channel, but we closed above it ever so slightly. So let's see what happens if we did continue breaking. Now we could break out and fail. So just keep that in mind as well. All right. Last is the Qs daily. Same thing here. Just running up the upper end of the Bollinger Band, way overextended. MACDs are overextended, lower volume, so not what you really want to see. But again, there is no signal yet to short the market. Okay, let's just be on our toes, try to take the best trade setups until we get volatility back into the markets. And again, it'll come, and it'll come as a surprise, when unexpected. When everybody doesn't expect a pullback, that's when it comes. Like right now, everybody's expecting a pullback. Markets are not giving it to it. So, let's be patient. Let's work the orders, work the trades best way possible, and you will get rewarded. Okay, have a great day. Enjoy the week, and we'll speak to you tomorrow.